Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Silicon shakedown. Bloomberg learns that Nvidia and AMD have agreed to pay the US government 15% of Chinese AI chip revenues in return for export licenses. Territory on the table. NATO Secretary General says this week's US-Russian summit may open the door to negotiations about Ukrainian land. Oil slides further ahead of that meeting. Plus, doubling down, Israeli Prime Minister Benjamin Netanyahu defends his plan for a military sweep of Gaza, calling it the best available option. Good morning. Happy Monday. So it's a big week in terms of the data story with inflation out of the US on Tuesday. Wage growth picture as well being illustrated and built out here in the UK. That is one to watch. And then towards the end of the week, you have data out of China. But front and centre right now is the look ahead, of course, to the meeting between the leaders of Russia and the US on Friday. And markets are reacting to that. You're seeing that across the pricing when it comes to Brent. You're seeing that across the pricing when it comes to gold. Across the futures picture then, European assets on the front foot, US futures also gaining so far in the session. Euro dollar at 116, just a little higher, up 0.2% for the single currency. The Bloomberg dollar index is under pressure again. The dollar selling off in the session today. Brent is where the action is again as we look ahead to that potential meeting between the two leaders. Currently down 0.6% after dropping 4.4% last week. Gold also losing some value on the back of the easing of these geopolitical tensions, really expected easing of geopolitical tensions, currently down 22 points. And soybeans in focus. President Trump saying that China should quadruple the purchase of soybeans. We know, of course, that there is a deadline to meet. That comes up tomorrow, fully expected by the markets to be extended. We'll see if that comes into play, of course. Soybeans being flagged by President Trump as potentially one of the solutions to those trade tensions, and currently seeing futures pricing up more than 2%. Let's flip the board and have a look cross-asset then. The Asian session is on the front foot as well. You're seeing a bit of pressure in terms of the chip makers on that story around AMD and Nvidia, and we'll unpack that for you shortly. But in terms of the geopolitics, that is giving a lift more broadly to the Asian session. Japan on a holiday. Across the benchmark, you're seeing gains of 0.3. Over in Hong Kong, up 29 points. CSI 300, the mainland Chinese index, currently gaining 21 points, up 0.5%. And over in South Korea, the Kospi down 3 points so far in the session. So to the chip story, Bloomberg learning that Nvidia and AMD have both agreed to pay the US government 15% of their revenue from Chinese chip sales. That's as part of a deal to secure export licenses. Our China correspondent Min Min Lo has been across this story for us and joins us now. Min Min, how has Beijing responded to this unusual arrangement?
Well, Beijing hasn't yet responded to this, and it is possible that China might not actually respond at all, because this is a revenue cut on U.S. companies, not necessarily a direct hit on Chinese companies. So we may not hear anything from Beijing at all. But certainly it's a good thing, because if it speeds up the granting of export licenses, we know it already did. According to the FT, those export licenses started getting granted after Jensen Huang met with President Trump and came to this deal to give a cut of the revenue to the US. That certainly is a good thing to keep the flow of chips to China. And if you look at the Asian chip makers as well, it's interesting that we're seeing that trading a little bit mixed here. You can see Samsung, for example, down almost 0.1%, while TSMC is up. Now, analysts are saying, well, this is a positive thing that could spur infrastructure investment in AI in China, but that's largely already priced in. But the 15% revenue cut, that's a surprise that could hit profits of AMD and Nvidia, profits that could likely be squeezed from some of these upstream suppliers like TSMC and Samsung.
What about the question around national security, Min Min? Because the idea, the rationale around these restrictions on these chip sales to China had always been, both under Biden and President Trump, about national security. That is being unwound right now. Does this raise a question mark about how significant the national security component is when the US comes to thinking about tech into China?
Definitely, it raises the question of whether or not President Trump is willing to trade off these national security risks in return for more tax revenue or a cut of these companies' revenue. So will President Trump actually roll back even further some of the existing chip curbs on China? We know, of course, this is coming ahead of their trade truce deadline tomorrow, and China had been pushing the US to roll back these chip curbs even further. But at the same time, things are a little bit complicated now because China had increasingly been worried about some of these security risks associated with Nvidia's chips after especially US administration officials calling for the installation of these so-called backdoors or location tracking capabilities on the chips to ensure that they don't fall into the wrong hands. And of course, understandably, this is something that China would be extremely opposed. Here you can see this is a social media post linked to a Chinese state media, CCTV, saying that all countries need to be cognizant of this risk and to build up their own AI capabilities to counter what they see as US AI hegemony.
Bloomberg's China correspondent Min Min Lo with the latest in terms of that agreement between AMD and Nvidia. Thank you. And the Chinese reaction, of course, a response and likely impact. Meanwhile, on geopolitics, NATO Secretary General Mark Rutte has said this week's US-Russia summit may open the door to negotiations on Ukrainian territory.
I think it is important that the meeting takes place next Friday. President Trump broke the deadlock with Putin in February. That was very important. He was the one delivering the big success at the NATO summit, the 5% spending commitment in June, one of the biggest foreign policy successes of the US in the last couple of years. And of course, only a couple of weeks ago, he decided to again open the floodgates of lethal support into Ukraine and to put secondary sanctions on countries like India. So he clearly is putting pressure on Putin. Next Friday will be important because it will be about testing Putin, how serious he is on bringing this terrible war to an end.
Well, meanwhile, sources say EU nations are seeking to talk to President Trump before his meeting on Friday with Vladimir Putin. Joining me now to discuss further is Bloomberg's Tony Halpin, who leads our coverage on the Russian economy and government. Tony, thank you for joining us. How likely is it that Ukrainian President Volodymyr Zelensky will be presented with a deal then that forces him to hand over territory to Russia? Even NATO Secretary General now is discussing this as a possibility.
Yes, I mean, this is the great fear in Kiev and in capitals in Europe, Tom, that essentially Putin and Trump will meet in Alaska, about as far away as you can get from Europe and Ukraine, carve up a deal, present that to Kiev, and they'll have little or no choice but to accept it. That's the worry. Europe is making lots of declarations about international principles of law, but essentially Vladimir Putin has shown for 3.5 years how little he thinks about these international principles of law. And President Trump is clearly voicing his opinion that there will be territorial swaps and that they're more interested really in ending this war than in standing on principles of territorial integrity or borders. So it's a very great concern in Kiev and in Europe, and there's not much evidence that they're able to really influence this discussion.
And as we've been reporting, of course, European leaders are rushing to pick up the phone and speak to President Trump ahead of that meeting on Friday. If we get to a scenario, Tony, where this is essentially deal or no deal presented by President Trump to Zelensky, what kind of reaction would we expect to get from Kyiv? And in terms of the European support, is there a gap that can be filled right now in terms of capacity from Europe to close the gap if the US pulls back in that scenario?
Yes, it's interesting. And Vice President Vance was saying over the weekend that essentially the US now regards this as Europe's problem and that it's for Europe to fix. And if they're interested in continuing to support Ukraine, well, they're welcome to do so. But the problem for Europe is that they've had 3.5 years to prepare for this moment, and they haven't really. They don't have the independent military capacity to support Ukraine without US support. Some of the weapons they simply don't have, and others they don't have in sufficient quantities. And so we're hearing lots of discussion about non-recognition of occupied territory while accepting the fact that in practice that territory is occupied. And from a Russian point of view, that's a distinction without a difference. They will hold the territory, and from Russia's viewpoint, it will be a successful end to the war. They will have Ukrainian territory that they didn't have before. And even as we hear before that President Trump is talking about land swaps, these are all land swaps of Ukrainian territory. So again, Russia will view this very much as a positive outcome to their invasion.
OK, Bloomberg's Tony Halpin with the latest in terms of the thinking and the rush to diplomacy ahead of that meeting, of course, between the two presidents. Tony, thank you. The market reaction is there as well. Traders are certainly starting to place the bets that there will be some kind of solution, at least some progress when it comes to talks between Russia and the US on the question of Ukraine. For more on the market reaction, let's bring in Bloomberg's Valerie Teitel right now. And Val, you've been looking at oil and gold.
Yeah, I do think that oil is pricing in some sort of breakthrough, even though it does sound like geopolitical commentators think that's less of a chance. The oil market is telling us there just might be. We have Brent crude and WTI both on a back foot today, and this adds to already quite a decent slide since that weak payroll report. Take a look at how Brent crude has traded in the last 7 sessions. We're down nearly 9% on this major crude index, down 8.7%. So the market is in some way pricing in something a bit more positive from these Russia-Ukraine talks. It's also having an impact on the wider market today. We have the dollar softer, U.S. equities futures in the green. We also have gold taking a back foot. Now, you can read this one as two ways. Maybe this is just the risk on sentiment, or perhaps this is undoing the move on Friday when we got stories from the FT and from Bloomberg talking about tariffs on gold bars. So whichever way you read it, it's negative for gold this morning. We are seeing gold futures retrace from record highs that they hit earlier on Friday.
And Val, on the data front, Tuesday, it's the big one in terms of the US and inflation. CPI dropping on Tuesday. Are we going to see that pass through when it comes to tariffs?
That's the big question, just kind of what tariff-induced inflation will we see? But I want to point out something that Governor Bowman said on Saturday, Tom. She strips out all the one-off tariff impacts into PCE inflation, which leads me to believe that maybe after Tuesday's print, you're going to have some Fed officials viewing core goods and core services holistically, and the rest of the market wanting to strip out every component that has any tariff-induced inflation and viewing inflation still on a downward track, those core services, housing inflation still in disinflation territory. That was very much Michelle Bowman's argument on Saturday. She's still penciling in 3 cuts the remainder of the year. That's 1 at every meeting. And this is a chart that does, break out the components of inflation that some Fed officials are worried about. That's this core goods line here at the bottom that has been ticking up. But other Fed governors, such as Michelle Bowman, such as Governor Chris Waller, are way more focused on the progress that we've seen in core services and housing inflation.
OK, Bloomberg's Valerie Teitel, and we'll see if the data confirms or pushes back on some of those views. Here's what else to think about then in the week ahead. We do, of course, get that CPI print on Tuesday, as we mentioned. The US-China tariff truce also ending on Tuesday. We'll see if they push that deadline out. That is being expected by many market participants. Maybe another 90-day extension. President Trump talking today about the need for China to buy more US soybeans. He talked about that inflation data. That's out on Tuesday, as I mentioned. Thursday, UK second quarter GDP. We've seen the slowdown in growth here in the UK, and we'll see if that gets confirmed again with the most recent print when it comes to GDP data. And on Friday, Bloomberg European Tech Show, Bloomberg Tech Europe, we get the latest episode where we're going to be focusing in on the impact on the labour market and on jobs of AI right now and into the future. So tune in for that episode. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. On the terminal, front and centre, of course, is the news that AMD and Nvidia have come to an agreement around revenue being sent to the US Treasury in terms of sales into the Chinese market, 15%, an unusual arrangement, broader implications for the tech sector. Coming up, Israeli Prime Minister Benjamin Netanyahu defends his plan for a military takeover of Gaza. More details on that next. Plus, later in the programme, I'm going to be joined by Simon Kohl, who is part of the Nobel Prize-winning Google DeepMind team. We're going to be discussing his latest project, pioneering drug design. Stay tuned for that conversation coming up later in the show. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Israeli Prime Minister Benjamin Netanyahu has defended his plan for a further military sweep against Hamas strongholds in Gaza, calling it the best available option for recovering hostages. The plan has drawn condemnation from foreign powers and vocal opposition at home. Let's bring in Bloomberg's Dan Williams, who is in Jerusalem with the latest. Dan, first talk us through the details then of this planned Israeli operation in Gaza, what it would involve and why the pushback.
Good morning. Yes, this plan that was authorized in the early hours of Friday doesn't appear close to implementation. For that, we would expect to see the mobilization of potentially tens of thousands of troops as reinforcements. Nonetheless, it set off a surge of condemnation over the weekend, both internationally and domestically, with Israelis, both to Netanyahu's right and left, saying they're unhappy with it. Netanyahu yesterday briefed both the foreign press and the Israeli press separately in what seemed to be an attempt to defend this plan against the criticism. The plan would see Israel going into the around 25 to 30% of the Gaza Strip that has yet to fall under full military control. Part of the reason for that is that Israel believes that this is where those 50 hostages yet to be recovered from Gaza are being held, and previously it didn't want to hurt them or it didn't want to risk harm befalling them. Now it says it's willing to go in there, starting with Gaza City, the de facto capital of that Palestinian territory. So far-right coalition parties in his government say it's not enough. They want a full sweep. They want promises that the entire Gaza Strip will be taken over, perhaps annexed eventually. Whereas there are those, especially relatives of the hostages, who think this is a needless endangering of the hostage, a needless protracting of a war that has lost popular support within Israel.
And Dan, in terms of the foreign condemnation of Israel, and we're hearing growing calls from countries like Australia potentially looking to recognise a Palestinian state alongside the UK, which is making moves to do that potentially as soon as September. This at a time when, of course, the campaign by Israel in Gaza continues. And we've seen reports now that journalists have been targeted. We know that many have already died in Gaza. But journalists from Al-Jazeera have been targeted. What is the latest in terms of what we know about these Al Jazeera journalists who have been killed in Gaza?
Indeed, overnight, a tent was struck by Israel, killing at least 4 members of that news operation, the Qatari-owned news operation Al Jazeera. Unusually, and it's worth noting that there have been scores of journalists killed. Oftentimes, there's no Israeli comment, or they're treated as civilian collateral damage. Here, the Israelis say they indeed targeted one of those journalists, accusing him of doubling effectively as a Hamas fighter, a Hamas rocketeer. The language they use spoke in the present tense, suggesting that he was, while working as a journalist, also working to advance Hamas's military aims and attacks on Israel. The Israelis produced documentary footage, which they said back this up. It would appear that this is backdated. The documents they had suggested that they had Hamas ties several years ago, 8 or 7 years ago. What's interesting here, especially beyond the angle of an attack on journalists, is the geopolitical aspect, given that Al Jazeera is a flagship operation of the Qatari state. Qatar, despite its troubled relationship with Israel, is still important to the Israelis, certainly as a mediating country with Hamas when it comes to now stalled efforts for a ceasefire. This will not be well received in Qatar. The question is whether the Qataris will choose to respond on the diplomatic track vis-a-vis Israel by, for example, officially shutting themselves off as a mediator should those ceasefire talks resume.
OK, Bloomberg's Dan Williams with the latest, joining us out of Jerusalem. Dan, thank you. Coming up, we're going to be switching focus. The Swiss government plans emergency talks with pharma companies as President Trump threatens further tariffs. Details coming next on that story. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Switzerland's government has reached out to local drug makers Roche and Novartis to discuss the tariff situation. It comes after the country was hit with the highest US levies in the developed world. Bloomberg's Paula Dernica is in Berlin with the latest. So, Paula, pharmaceutical firms then have not yet been hit by tariffs imposed by the US, but that, of course, could all be about to change. It has been threatened by President Trump. What are they gearing up for?
Exactly, that's the question. So there are 39% of tariffs for Switzerland. They do not apply to pharmaceutical companies yet, though President Trump said last week that he maybe this week or so, like this coming week now, would announce tariffs on pharmaceutical products that would start like being small, but that could go up to 250% over time. So that would definitely be a huge hit on Swiss pharma drug makers and also other drug makers in the world.
How are companies adjusting then, Paula? I mean, the earnings season suggests that largely these drug makers have been unaffected by US tariffs, and for the reasons that you've outlined, they haven't been impacted yet, they haven't been applied yet. How are companies adjusting in terms of the threat of tariffs, in terms of the changes they're making?
I think there's definitely still the hope that discussions with the government could change something. This is also why there was an emergency meeting set up for the Swiss government to discuss with Swiss drug makers after the Swiss president went to the US last week to discuss the tariff situation with the US administration again. What companies themselves are doing, they are really looking at their pipeline at the moment to come up with new drugs. We just saw today a new headline from Novartis posting the results of a new trial result. And this is really all they can do. I mean, President Trump asked them to lower prices, and obviously that will be harder when tariffs are higher. They are looking if they can set up some production in the US, and Novartis and Roche already have made huge promises that they are actually going to do that, but that hasn't swayed the president yet to exempt them or to make any concessions to pharma or to Switzerland.
OK, we will watch this space in terms of the developments on that front, in terms of the pharma industry, crucial as it is, of course, to the economy of Switzerland and the potential threat of tariffs coming through from President Trump. Bloomberg's Paula Dernecker in Berlin with the details. Paula, thank you. And Paula mentioned the lines coming through from Novartis. I'll just give you a wrap in terms of the context around this story. This broke in the last couple of minutes. Then the Swiss drug maker, of course, Novartis, announcing both its ianalumab phase 3 clinical trials meeting the primary endpoint in patients with Sjogren's disease. Sjogren's disease affects 90% of women. In fact, those affected, 90% of them are women, up to 4 million people in the United States, and it affects things like tear ducts and stops those affected producing tears effectively in terms of the details around this. So there has been some success in terms of Novartis with these phase 3 trials demonstrating statistically significant reduction in the disease for Sjogren's disease, again affecting up to 4 million people in the US. So that is a stock to watch for you at the open, 8 a.m. UK time. Coming up, when it comes to filling up your car with petrol or charging it with electricity, which one is cheaper? You would assume it would be electricity. We'll bring you the details, though, and get the answer, the context around that story. That's coming up with the analysis. Stay with us. This is Bloomberg. Good morning, happy Monday. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Silicon shakedown. Bloomberg learns Nvidia and AMD have agreed to pay the US government 15% of Chinese AI chip revenues in return for export licenses. Territory on the table. NATO's Secretary General says this week's US-Russian summit may open the door to negotiations about Ukrainian land. Oil slides further ahead of that meeting. Plus, doubling down, Israeli Prime Minister Benjamin Netanyahu defends his plan for a military sweep of Gaza. calling it the best available option. Let's get to the market reaction then. So far, the focus, of course, on two key stories driving these markets. One is what's happening in terms of the chip stocks, and you're seeing that pull down in terms of the Asian session, pressure on the chip makers. But the gains coming through in terms of European and US futures on expectations and hopes that maybe there will be some moves towards a resolution when it comes to this conflict between Russia and Ukraine. Of course, there is concern in Kyiv about those proposed territorial accessions to the Russian side. Of course, European futures pointing up by 0.2%. FTSE 100 futures here in the UK looking to add just 3 points so far in the session. S&P futures stateside looking to add 0.1%. Nasdaq 100 futures gaining 26 points. Let's flip the board and have like cross asset. Goldman Sachs telling us, of course, reporting in terms of the latest note, Jan Hatzius and team, that the consumer in the US will increasingly be affected, of course, by that pass-through of tariffs. You have the inflation data out on Tuesday. That is crucial. US CPI. Euro dollar right now up 0.2% on dollar weakness. The single currency at 116. Brent under pressure on that conversation between the two presidents of Russia and the US, scheduled, of course, for Friday, down 0.5% after dropping 4.4% on Brent last week. Gold also selling off in terms of that hedge. The safe haven currently down 0.6%. And soybeans seeing a bit of a pop in terms of the futures as Trump tweets he wants to see China buying more of those soybeans from the US into China as we look ahead to tomorrow's deadline and see if there is an extension between the US and China on those trade negotiations. Talking of China, Chinese battery giant CATL has suspended activity at a major lithium mine in the country for at least 3 months. Sources say it announced the halt internally after failing to extend a key mining permit that expired over the weekend. For more, we're joined by Bloomberg's Martin Ritchie. And this in Asia has been market moving, with lithium stocks jumping on the back of this. Martin, how significant is this temporary? It is temporary, the suspension. How significant is it for the world's biggest maker of EV batteries, CATL?
This is a pretty big development in the lithium market. The mine in Jiangxi province in China is one of the world's biggest, but it also lies in a sort of lithium mining hub in China. So as well as this mine stopping, there's speculation that some of the other mining activity in this area will also be stopped. And that's, I think, what's contributing to the very big gains we're seeing in some of the stocks this morning. Ganfeng Lithium, the Chinese producer, up 20%. Tianqi, its peer, up 19%. And then really big moves for the Australian lithium miners, just on the expectation that this lithium market is going to perhaps not be in such oversupply in the coming months with this big mine shutdown.
Martin, are those assumptions accurate, that there's going to be less oversupply? What are the broader implications of this move longer term for lithium that, as you say, has been under pressure?
It's been under pressure for some years. So lithium, the big boom back up until maybe 2022, then prices have really crashed since then. The world has been in really deep oversupply, far too much lithium around, too many smaller producers coming into the market. The lithium hub in China emerged as a major supplier in recent years as well. So prices down still about 90% from those times. It's difficult to see that situation is going to turn around like meaningfully, really, in the next months or even year, which is going to take much more cuts to sort of rebalance the market. Another factor here is just the general slowdown in the EV industry worldwide. Obviously, you've seen in the US sort of regulatory pushback, Trump reining in some of the support for EVs, which is one of the factors contributing to the sort of doldrums still in the lithium market.
Martin, is this a supply issue or is it a demand issue? I mean, how finely balanced is that? You touch on those key components in terms of whether this ultimately this is another example of Chinese manufacturing and industry in oversupply mode, or is it more of a demand story?
There's a bit of both, but I think the supply side is quite decisive just because in China, you've seen the emergence of this mining hub in Jiangxi, as I referred to earlier. it's been feeding a lot of material to the big battery producers in China that in turn help the major EV companies to lower costs, to keep critical supplies of their raw materials. And so a lot of these mines are maybe operating despite the fact they may be typically loss-making. They are not loss-making, but not operating at profitable levels compared to like mines in Australia. So, we're waiting to see if there's more government action in China to sort of close down these mines and rebalance the supply there.
OK, Bloomberg's Martin Ritchie with the update in terms of the closure, or at least the suspension of that lithium mine by the biggest producer, the biggest maker, of course, of EV batteries, supplying the likes of Tesla, CATL. Martin, thank you. So the impact of CATL then suspending activity at that major lithium mine will be felt most acutely, of course, in the EV car space. But the costs when it comes to charging your EV car at home, or at least are at fast public charger, can fluctuate wildly, whether or not you charge it at home or at one of those fast chargers. There are countries where refuelling with electricity is actually far more expensive, counterintuitively, of course, than pulling up to a petrol pump. To break this down further with me, let's bring in Bloomberg NEF analyst Madeleine Brolly. Madeleine, thanks for coming into the studio to talk us through the story. The analysis, of course, that you and the team have been pulling together on this. It does seem counterintuitive. On a kind of simplistic level, you would assume that it would be cheaper to charge your EV than to fill up at the pump. What is going? Which is cheaper, and where is that happening?
Yeah, absolutely. And the answer to this very much depends on where you're charging. So charging at home remains significantly cheaper than gasoline across much of the world. Just looking at standard electricity tariffs that people pay for your home across Europe, drivers see about a 40% saving compared to gasoline on average.
40% saving.
And that's just on a standard tariff. Many are saving much more than that by using these dedicated EV charging tariffs. So these will lower your costs during an off-peak period, and they actually lower it to under the equivalent of 2 cents per kilometre, which is about a fifth of the cost of gasoline in the UK, for example. The challenge comes when you can't access a home charger. And this is where we've seen the cost of fast charging in some markets become substantially more expensive than gasoline on average. So just looking across Europe, we see about a 25% premium, but some markets it's much greater. So the UK has the most expensive fast public charging in Europe, and it's about 80% more expensive than gasoline on average.
Why doesn't it surprise me that the UK comes out top of the list in terms of higher costs for EV charging, higher costs across the board, it seems, in the UK for a number of different things in which we purchase and have to spend money on it, and EV charging is one of them. In terms of lower prices across globally, whether it's Europe or globally, which country is best positioned to offer you the prospect of really, really cheap EV charging?
So China has very cheap charging both at home and in public. There are several European markets that are doing well on this front as well. One thing we've noticed actually is the price of fast charging in some Nordic markets, so Norway and Denmark, coming down. And we think that's because the EV adoption has been strong and now demand is at a level where it can start to spur competition in the market.
What about co-locating charging? What is co-locating? Because this is something that's being considered. You could have businesses, homes, you've got co-locating of charging. Is that something that's being worked through right now?
Yeah, absolutely. So just taking the UK as an example for this, operators are facing some significant challenges. So the grid fees that they pay for their sites have risen quite substantially, even just compared to a few years ago. And so what we've seen is that some businesses that have alternative forms of revenue, so thinking about maybe a supermarket, they've been able to keep their average prices somewhat lower than the national average. So fast charging dedicated operators have been really focused in the UK and other European markets in rolling out a robust, high-powered network that will suit the future needs of the EV fleet. The problem they've got is that they've got the demand of the EV fleet today. And so it's definitely a bit of a balancing act for the industry and how it manages that expansion with a kind of revenue generation today. And high prices are part of that. OK, Madeleine, thank you very much indeed. Really interesting analysis. And, of course, you can get more details on Bloomberg.com and, of course, on the terminal from Madeleine Brolly and the team at Bloomberg NEF. Staying on renewables, a redhead crossing the terminal just in the last few minutes. This is the wind turbine maker, of course, Ørsted, planning a rights issue to raise proceeds of $60 billion
Danish kroner. The details then crossing the last couple of minutes. The Danish state, by the way, has undertaken to subscribe for 50.1% of their share of the rights issue. And this is to fill some of the financing gaps for this company. In terms of how trading and pricing may be affected as we lead up to the market open, on Tradegate, Ørsted is down 6.9% on the back of this news. Also updating in terms of second quarter revenues, coming in at 17.1 billion Danish kroner, slightly above the estimates of 16 billion. But it's the rights issue that seems to be weighing on the stock as we lead up to the open of trade. Of course, that's on Tradegate, currently down 6.9%. So watch that stock at the open. Coming up, how AI is being designed and used to design new drugs at the push of a button. I'm going to be joined by Latent Labs founder Simon Kohl, part of that Nobel Prize-winning team, formerly, of course, at Google DeepMind. Stay with us for that conversation on the implications for the drug industry. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, every year, pharmaceutical companies spend billions of dollars, of course, trying to discover new drugs. But now AI is being used to speed up that costly process. The startup Latent Labs says it has developed a platform that can design new medicines from scratch using AI to eliminate years of trial and error. The founder and CEO of Latent Labs, Simon Kohl, joins me now. And Simon, this announcement is around a product called Latent X, which is for many going to be free to use as well, at least to start with. And this is a generative AI model for protein binder design, which you say can be used on your platform, push button protein design. What are the potential? What is this product? What does it do? How can it be used? And what's the potential?
Yeah, thanks so much, Tom, for having me. We've launched Latent X, as you said. It's a frontier AI model. It represents a significant leap in drug design. We've made it available on our platform at a free tier. The model is able to generate binders within seconds computationally, when really conventional methods require up to months and millions of random trials to arrive at molecules that bind with success rates lower than 1%. We've achieved similar results, requiring as few as 30 designs, and that's really where the revolution lies. We have that in our platform for free tier access, making that available to a wide range of scientists. And yeah, we're really excited to see what people will build with this. And then obviously we're trying to collaborate with partners on this.
And push button design, push button protein design, this means that if you're a researcher, if you're working at one of the big pharma companies, if you're one of the big labs or one of the big universities, you can literally go onto the platform. You don't need any coding background. You can insert the details and the data around your protein, and you can come up with a target. What does that mean in practice in terms of push button? How simple is it really in practice?
Yes, so the simplicity lies in the user interface. Really, the technology underneath it is complex, it's advanced, it's required long development. But then to the user, we surface this in a very simple way. You don't need AI infrastructure, you don't need to build your own AI team. You can literally log on, you upload a target of interest, a therapeutic target, for instance. You indicate and prompt where you want to bind, and the platform generates that literally within seconds. And it's so fast that you can experiment computationally in seconds and make lab-ready proteins that you can then pass on to the lab for testing.
For the layperson, why is protein binding and therapeutics important? What does it mean for therapeutics, protein binding?
Yeah, it's really a fundamental mechanism of drugs, binding other proteins. That's essentially what underlies all drugs, if you will. And so we're really getting at that first layer, that fundament of making drugs. And we're showing that in lab experiments on two different therapeutic drug modalities. We've shown it on macrocycles. Those are small proteins that stand to benefit from oral drug delivery. and mini binders. Those are more versatile but highly specifically binding proteins. And then, of course, we're validating further. This is a very general model. We're looking at nanobodies, antibodies, and we're extending into a whole space of possible biologics here.
Which areas of therapeutics do you expect to see the fastest adoption? What is the timescale around that?
Yeah, typical timescales, of course, famously are long in this game. They're like 10 to 15 years from inception to hitting the market. And a lot of that is due to the trial and error nature of the process. And of course, clinical trials, take up a significant chunk as well. But we're really in the business of trying to make this much easier, getting it right from the start and reducing that early time when we're doing R&D and discovery. And so, a platform that, takes literally only seconds to make viable binders, that changes the business in terms of the time structure, the cost structure, and so that's what we're excited about.
Okay, and there is this free option, both for commercial use, interestingly, as well. So how do you plan to commercialize this?
Yeah, really, we're looking at this as democratizing frontier tools for drug design. And why that's interesting is that, we believe in making this widely accessible to scientists, showing the value first, and then, essentially, commercializing it as we go along and second. And we really want it in the hands of everyone, whether that's scientists in academia or scientists in large pharmaceuticals or biotechnology companies or CROs. And so for us, it's about scale and making it widely accessible at this moment.
There's been so much conversation about AI and drug discovery, and a lot of companies, of course, tying their tails to this theme. When do we get the first AI discovered drug? I was speaking to Demis Hassabis towards the beginning of this year. He said maybe by the end of this year. When do we get that first AI discovered drug, and when do regulators give their seal of approval?
Yeah, that's a great question. So, of course, everyone is sort of pushing on that, rushing towards that. I think it's, we're going to see, essentially, right? Like the clinical trial stage, that's not to be sped up yet. We're going to want to do this sort of carefully, of course, and really...
Do those clinical trials need to be sped up, though? Does that whole structure need to change?
Yes, we do think so. We do think that's the case. The FDA, has released at least intent that they want to significantly look into that. Again, also using AI models, using potentially human organoids and other techniques to help speed that up. I do think there's a need for this. But again, we're going to want to do this really carefully. Of course, it's at the end of the day, humans that will get administered these drugs. And so, we endorse that. But overall, of course, we do want to bring these 10 to 15 years down. That's the bottleneck at the moment.
We are in the middle of earnings season. We're coming through the end of earnings season. When we look at the big pharmaceutical companies, so much, of course, of the spend around CapEx and R&D comes through in the data when it comes to their earnings story. What does this mean for R&D spend 5 or 10 years out for these big pharma giants?
Yeah, again, I think doing the speed up, the acceleration with a platform like Latent X, where we reduce the time to making these therapeutically relevant binders, I think changes the cost structure, changes the time structure. I think we're going to see the impact of that in not too long. There's lots of inbound, lots of interest. We're working on pilots. We're working with many people in this area. And so I do think the field overall will see a good impact of AI for protein design tools in not too long.
Okay, Simon Kohl, thank you very much indeed. Founder and CEO of Latent Labs on AI drug discovery and this new generative AI model that is available right now. Simon, thank you very much indeed. Right, plenty more coming up. I'm going to break down and give you a preview of some of the inflation data out of the US expected, of course, on Tuesday, and check in again on oil prices on the back of geopolitics, Russia and the US and that meeting on Friday. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So our team have been reporting out the complexities of any deal in terms of the US, Russia and Ukraine as we look ahead, of course, to the meetings between the two presidents on Friday. But markets are betting that there will be some progress. At least that is coming through in terms of the oil pricing. Brent down 0.5% so far in the session at $66 a barrel. WTI down 0.6 as well at 63. And this, of course, after Brent fell 4.4% last week. So the pressure on oil prices continues. We watch, of course, any further commentary as we lead up to that meeting between the two presidents. The NATO Secretary General saying that territory will have to be part of that conversation. In terms of the pricing, as again, year to date on oil, that pressure has been there. OPEC Plus has been putting more barrels on the market, of course, down 11%. Let's get a view in terms of the inflation story out of the US. This is a big data point, of course, dropping on Tuesday. And Goldman Sachs putting out a note, Jan Hatzius and team, saying that the US consumer will start to pay the price now of these US tariffs, of course, on imports into that country. So far, companies have absorbed most of the cost, but consumers will start to feel the pinch. This, according to Goldman Sachs. This chart, by the way, shows US CPI versus the ISM Services PMI, and you have started to see that tick up, which has led to some flagging concerns about the stagflation risks, of course, for the US, and it's keeping some of those Fed officials on the sidelines when it comes to their views on cuts, though we know, of course, there is a mixed set of opinions on that. So Goldman Sachs saying that US businesses have so far eaten up 64% of the cost so far, but that share will fall to 10%. Consumers will start to feel the impact, with 67% of recent tariffs being absorbed by the consumer in the weeks and months ahead. Let's flip the board again onto the UK wage growth story. We get GDP data out later this week for the UK as well, and we know there's been a slowdown in the overall growth picture. We had some details out of KPMG earlier today, just after midnight, in terms of the wage growth of the UK. It's weakest since 2021. Wages are being squeezed. Companies are putting less money on the table for new hires, and that is starting to squeeze wage growth. You see that coming through the latest data, again, from KPMG and, of course, the Recruitment Confederation as well. Demand for permanent staff also falling the most in 5 months. So the white line is the UK weekly earnings, ex bonuses. You've seen that back below 5. And in terms of the blue line, that's UK CPI. So inflation's ticking up, even as wages start to come down. We'll see how that dynamic, of course, evolves. The Bank of England cutting rates last week. Bloomberg Terminal users, of course, can access these charts and others used throughout the show at GTV Go on the Bloomberg Terminal. And the next edition of Bloomberg Tech Europe airs this week on Friday. We're going to be exploring how AI is changing the way we work. That's at 6:30 a.m. London time on Friday. But up next, it is the opening trade. Stay with us. This is Bloomberg.